the rock trade, I can start like changing the dynamic of that a little bit.
Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week.
I can do it with a partial roll instead of rolling up to 20 points under the money. I can maybe roll a little bit lower, right? So I can do that. I can take this out and I can correct my delta with something that is not like this has no value, right? This call in its isolation has like no value. This is all time value. So I can change that to IWM shares. I can make a delta correction with IWM shares, something that moves similar, right? So I can buy 37 IWM shares and go to neutral delta. Uh, and and that will take away some of the vulnerability, right? So switching assets is so I can do that. I can try and do it with moving up some of my short strikes, right? So I'm adding a little bit of vulnerability here, but I'm taking some away here. Uh, it's like, yeah, I'm not to my delta limit, but that doesn't mean I can't make an adjustment if I want to take the vulnerability away, right? But I don't want to take the vulnerability away indiscreetly. I want to be aware of what I'm doing. Um, right, this is going to make me, actually, this doesn't make me more stable. Um, well, I can take this away and it will, right? And then I can go a little bit more heavier here. Right, so I'm just playing around with stuff and I'm trying to create what I want. Like I can't make a good decision if I don't know what I want. I guess that's the point I'm coming to. If I don't know what I want, I can't make a good decision. Like I can do this, right? And I have a little bit more on the table to the downside, but you see, I shifted my vulnerability here for now. And I've taken away this vulnerability. I can do that to a less extent. I can be a little bit more aggressive here, right, with my thing here. So now I'm still at the same negative delta, but now I've taken away this. My downside isn't too bad, but my opportunity's gone if I want to play for the big down move. But now I can play for this range here, and I can do it like if I'm not so sure, right? If I'm very sure I'm coming down, I don't want to do anything. If I'm not so sure I want to come down, but I don't want to go to the point where I roll this up and like if I roll this up, especially close to expiration, I have especially with the way the market's moving, like 100 something points, I have a lot of vulnerability to the downside, and I moved it a lot closer to the market price. And that's not a good thing either, right? So I'm thinking of this multi directions. And if you're being non-subjective price-wise, it's always what's my upside risk, what's my downside risk, what's my upside risk, what's my downside risk. I like this, right? It brings me into the positive theta, positive Vega realm. Not that I pay that much attention to that. My delta is still about the same, which is fine. Um, I'm at a normal roll point, but I don't want to roll because I don't want to take on the down vulnerability at this point, right? So I'm just saying a sample situation where this is like a nice compromise to that. Where my downside risk is my risk isn't too bad. And to the extent I take my risk away, I take away my opportunity to make money. So that's the way I look at it too, right? I start taking my risk away, I start taking my opportunity to make money away. And I've done that here. But right, and I removed the call. So that's not an issue anymore. Right. So this for me positionally, like if I do pure positional and non-subjective, I don't like this my vulnerability here. I don't really like a roll up necessarily either because that just takes my vulnerability and moves it higher, right? But it also takes my low side vulnerability, moves it up. But this kind of takes it away on both sides, right? So this is like what I would call, I guess, positional trading, where I'm not taking any market movement into consideration, really. Um, Other than I'm more concerned about my risk reward. How much do I have left? How much do I have in the position? How much, I'm still pretty safe to the downside here, right? I still have like a lot of range before that's a problem. But the thing is, if this grinds up, you know, I'm still going to get down to break even, and like I need to think about where I'm putting myself. Like if we come back to technicals again, if I think technically that we're going here, then this isn't necessarily very good either, because you know, if I do get an up move here and I'm at break even, that's going to force me, if I'm locked into this trade, which I shouldn't be. I could say, well, that just didn't work out. I'm going to close this and go into a different cycle and not worry about it, right? Because realistically, it's whether I make money overall. It's not whether I make money in this trade. That's what it should be, right? So bring in a lot of good principles here. I just don't want to lose too much money on this trade. From that aspect, that's fine. But if I think there's a high probability the market's going to be here, then I don't really want to be positioned like this either, right? I'd rather be maybe rolled up at that point. So there's a lot of dynamics that go on underneath that should be going into your decisions ultimately, and I think that's good to practice. Um, um, but yeah. So I pulled the call here. I corrected delta with verticals. I made my position size smaller by rolling up higher. I still have a good opportunity where I could make money. My vulnerability here, though, I mean, I have more vulnerability to the downside with a big move, right? So there's a trade-off. And also, if this thing just grinds up, I can't have this -10 delta in this line underneath here. That's gonna, if I'm expecting to win it, right? I'd have to be more aggressive than that. I can be more aggressive than that, but that starts to take away. That starts to take away my ability to profit. Like I can fix this. I can remove the call. I can bring this down to the point where we're um, where we're above zero. Now I have too much downside, and my position's bigger, and I don't like that. So go here, right? And now I have like no upside risk as far as losing the trade. Well, yeah, I do. I have a little bit. So I have to go a little bit more than that. So I got 5 and 5. So let's just go another 10. All right, and let's go another 10 here. So, whoops. And so yeah, so now I'm guaranteed to win something if the price goes up, but now I have some downside vulnerability. Maybe I don't, right? So I'm afraid of that now, right? So so I'm just trading like scared. So now I am in this tiny spot where, and this isn't terrible, right? I can't take more than a normal max loss here, but I'm starting to kill my ability to be profitable, like largely profitable, because the probabilities are now that I'm only going to make like $300. This isn't bad, right? So I can play around with this non-subjectively, and I can do that. Like I could do maybe another 5 and 5, and then I can do uh, like here. Right, it's hard to put this into a set of rules, but now I'm yeah, so 7 and 3. Right, so now I'm in this tiny trade where I've basically locked in my profits, and maybe I can make a little bit more, right? But you know, I'm in a trade where I'm trying to make $10,000, right? Realistically, in the rock trade, I'm trying to make $5,000 or $10,000. That's never going to happen with me doing this. So now my losses have to be smaller, and now I have to start stopping out earlier, right? So there's the whole dynamic that comes into play, right? There's this whole balancing dynamic that you're always running against, and this is like the balancing dynamic that you're doing when you're trading. It's like, where am I willing to take risk? Where am I not willing to take risk? At the beginning, you have no idea. It's like I don't know. I'm just following these rules, and they win most of the time a back tester, right? Um, and I just hope they work. And then when they don't work, I close it and I follow another set of rules that worked in back tester, right? Right. That's what the beginner does, and that's kind of what they fall into. And hopefully, people don't stay beginners for 20 years and keep doing that for the rest of their trading career and never make money. That happens, or only sporadically make money. But ideally, you want to start understanding, positionally what you're doing, which is what we're doing here. right? The option trade for income is to help us understand positionally and what certain types of things where their vulnerabilities are and so forth. It doesn't mean just because you're aware of it doesn't mean you want to take them. You have to take them out. Like people want to get in here and they want to be. I want to take away all the vulnerabilities and I want to make sure I win all the time. That's what the brain wants to do. That's where it wants to go. That's not trading. That's something else. You want to do that? It's not even life for you know what I mean? You always have you drive your car down the street. There's trade-offs for doing that, and there's risks in doing that. And people get killed a lot in cars, right? It's not uncommon. So it happens every day. So you want to be aware of that so that you drive safely. You don't drive like an idiot, right? And you drive a little bit defensively. You're not taking on too much risks. The same thing here. It's like there's risks to trading, and they're going to be there regardless of what you do. And the more you take them out, the less you can do. It limits your freedom. Like if I want to take away all my risks in driving, I wouldn't be able to drive it. It takes away my freedom, right? I drive because I want to be able to go places. I want freedom to do things. I want to get to work so I can make money or whatever, right? So there's reasons why I drive, and there's risks in driving, and they're present. I can pretend they're not there, or I can be right, and then in which case I'm driving unsafely, or I can be aware of my risks and then work around them the best I can based on the situation, right? There's risks in going fast, but if you're on a super highway, there's risks in going slow, right? So context is very, very important. So being able to understand your context and understanding what your risks are doesn't mean you take the risks away. If they become too big, you moderate them, right? Um, but you don't take them away because you can't get anywhere. You try to take all your risks away, you don't get anywhere. And ultimately in trading, if you don't get anywhere, you're losing. So we want to make sure that we're aware of these and we mitigate them and reposition where our risks are intelligently. And to do that, we have to have this understanding, yes. Assuming you're trading a little bit more non-directionally positive theta or higher probability. We want to be aware of them. We don't always want to eliminate them, and we want to do that on a situation by situation basis, which is dynamic of what's the price likely to do, what's it not likely to do, what's my position like, what ranges am I going to be in a certain period of time. Those are the things that we want to look at, and those will help us make a decision that makes sense rather than making a decision just based off of like, oh, well, I'm 5 days to expiration, and now I have to put my risk somewhere else because that's what you're saying. It's like, well, when I get to 5 days to expiration or whatever days it is, right? It doesn't matter. I'm going to automatically take my risk and I'm going to put it here. Well, sometimes that's going to be beneficial, right? Sometimes it's not. It's random, right? Doing that arbitrarily is just random, and I just want you to be aware that it's just random. It might be true that most of the time the market goes up, and most of the time the market doesn't move down so many points. And you might want to take that into consideration. You might say, well, most of the time that doesn't happen. So in my trading strategy, then I'm going to mitigate this risk. In this rock trade, the way we choose to do that by the guidelines is this. I mitigated that risk now. I don't really have a risk in this zone anymore, right? But now I have a risk here. In an M3.4U, we choose to do it differently. We choose to do it. We raise the expiration line. We reduce our size a little bit. We're still adding more risk to the downside, usually. It depends on how close we are to expiration, right? So that's about knowing how your dynamics change. If I do that in an M3.4U and I'm 40 days to expiration, that's very different than doing it in M3.4U and being 3 days to expiration, right? So, great question. And I just want to see, I want everybody to be able to see this at the advanced level and where you want to go. Not me giving you some crappy answer, right? Me giving you a crappy answer would be say, oh, when you get 14 days to expiration, you should take this risk out. That's like, I can give that answer and you might go, oh yeah, that makes sense. And that's fine, but realistically, it's a useless answer to you. I just gave you an answer that is not like valid, right? It's like, yeah, and that you should do it at 14 days. My correct answer. You should do that at 14 days expiration. And sometimes that's really going to be bad, and sometimes that's going to be good. Right, right. So that's realistically, if I understand what I'm doing, that's how I have to answer the question, and I want to be honest. Um, um, if I want to be truly honest, it's like, learn to understand what your other probabilities are and analyze your situation, and then decide. Decide where you want your risk, because you should always be aware you're taking away opportunity, you're repositioning risk, or you're repositioning opportunity. That's what you're doing. And if you can learn to do that intelligently, you'll do very, very well. And you won't win all the time. You'll never win all the time, right? But you'll do very, very well overall. That's where I want you guys to go. I want you to be able to make these decisions intelligently. It's like you don't get scared when you lose if you do something intelligently. It's like, yeah, I went in, I looked at the situation. I wanted to put my opportunity here. I wanted to put my risk here, and I kept my risk reasonable, and I lost. Right? I went with the probabilities. I gave myself the opportunity to win. I limited my risk, and this time I lost. There's nothing to be afraid of there. It's like, you did the right thing. It's just it just lost. That's trading, right? But when you win, it's like this, you do really, really well. And you'll win most of the time, because if you're doing that, you're keeping your risk in control, you're placing it intelligently based on where things are going to go. You're going to make money. That's just the way it is. And you don't have no choice but to make money that way. And like I said, you don't get scared when you lose, because you understand what happened. You understand why you lost. You understand you shouldn't have lost, but you did. But that happens from time to time, right? It's like going in. It's like, hey, I found a wallet on the street. Should I just take the money and walk away and maybe be arrested for theft, I guess, if I did that, right? Or do I bring it to the police or whatever, the authorities, and do I turn it in? And you might get a whatever, right? But it's a decision on what's best, and making this decision based on context is the way to do it, right? All right. So anyway, with that, I'm going to close this up. Hopefully that was helpful to everybody. And like I said, I sometimes I answer things harshly, and I apologize if I do that. I just try to keep things real. This was a fantastic question. Thank you for asking it. I think it needs to come out. It needs to come out for sure. All right. Very well, everybody.